All right, guys, let's get down to it and help make you some money. My idea right now is Marathon Petroleum Corp. MPC is the stock symbol. These refiners are doing extraordinarily well. Now, by the way, this company execution has been phenomenal, beating the street in the last 3 quarters. Last time out, they beat the street by 100%. $2.86. Wall Street is looking for $1.80, $1.38. Fiscal year 16 earnings estimates continue to rise. Main business refinery, I love it, is doing phenomenal. That's almost a slam dunk. Pipeline business is so-so. It's not really important to the bottom line, but there's Speedway. I mean, in certain areas of the country, you know Speedway, you probably go get gas there. On the East Coast, we'll know it too because they took over Hess, and they'll work those in over the next couple of years. All those Hess will become Speedway. This is what I like. In the fourth quarter, the gross margins were 24, almost 25 cents a gallon. For the year, 17 cents. I mean, it is starting to explode to the upside. They returned $2.7 billion in capital. That's just from dividends. Another almost $8-9 billion and buybacks. I think everything's working pretty well for these guys. The stock is up there. They're at a Credit Suisse summit tomorrow. I'm hoping I get good news out of that. In the meantime, looking for a breakout through 97. My target on this is 130, but this is one of these names I think you can really put away and ride out the ups and downs of oil. Because the refinery business, in my mind, is really special at this point, Matt.
Fundamentally, I love this. Price to sales 0.3, dividend ratio 1.9%, but it's all about refining to me. That's their big input cost, and when the output cost remains sticky. So your cost goes down, it helps the bottom line. I love this. It's been up to 23 of the last 27 trading sessions, so you may want to have a little bit of pullback before you jump into it.
Although, listen, sometimes people get a little bit too cute, but I get where you're coming from.
Yeah, it's still relatively a cheap stock. It's a great way to play the return of oil, and yet at the same time, because they're a refiner, they make money both ways, regardless of what the price is.
What do you make of it, Chet?
It's a high-quality name. When it comes to oil and gas complex, we went from an underweight. We now are relatively neutral on the sector. As long as your time horizon is 3 to 5 years, we would be buying unlevered companies, though, and that's the key. You have to look for good quality, unlevered.
What gets you to an overweight?
Overweight, you're going to have to see global growth tick up considerably. You're going to have to see China growth tick up considerably, which we're not forecasting at this inflection point. Yeah,
demand.
Our oil estimate is between $50 and $35 a barrel.
Really?
So you have to.
You're still at 35.
Yeah, we still have to be careful. Okay, right. But with that said, it's about the time horizon in investing, and if you have a long-term time horizon, you can buy some of these quality.
Well, I like this name a lot. You like the oil space?
Well, the oil space is very complicated, very complex, and I agree. You do not want leverage, and you do not want to make a big price bet for or against the price of the commodity.
All right, guys, let's leave it there.